Right. Let's continue on. So now we're going to move to task B. And again, like I mentioned, we're only going to focus on stuff that or skills that we haven't spoken about. Right? So I'm not going to rehash things. And that's I guess what am I looking for? I'm looking for the IOD. I guess that's also the beauty of it, right? So demonstrating where you should focus your attention, right? Because skills or principles or processes, or whatever you want to call it, can be repeated, right? So the same skills I spoke about in task A, I'm going to repeat in task B, repeat in task C, repeat in December with Saki's exam. Okay? Focusing on like the nitty-gritties of business combinations, how does it work? What's the difference between non-business and proportionate? That stuff, we'll discuss it, but that's not the purpose of these sessions. Okay, so any of the skills that reflect here again, I'll just say them out and I'll repeat it. And then anything else that's new, we'll dive a bit deeper into it. So let's look at the PRI again. Let's reflect on our research. Because again, what are we repeating? Notice how it starts with the research. Okay, it's impossible to start this session in the IOD. Makes no sense. Okay, I always have, even though we have the reflection videos, I always have to come back here to set the scene. Why? That's how important the previous information is. Okay. So another email from Elijah to you, the financial manager on the customer loyalty program. As mentioned to you earlier, our industry is hard hit by the pandemic, and we need to think outside the box on how we can boost our revenue. You have noticed that the PowerPoint presentation that we're considering a new customer loyalty program. And in that PowerPoint presentation, you were given a little bit of a snippet in terms of some of the features of the customer loyalty program, right? Which becomes quite important for the less so for the accounting conversation, but for the tax conversation. The features of this customer loyalty program are actually quite important because there's two, we'll get there. Some of our competitors have implemented customer loyalty programs quite successfully, right? So it's a proven concept. In particular, one of our competitors issues family cards to customers, which entitles these customers to benefits such as, I mean, at this point, I don't know whether you got in your research, it's like, oh, this really sounds like Spur Group, right? And I don't know, maybe some of you pulled Spur Group's apps and had a look. I just want to comment on that. Okay, it doesn't mean that, but you can always get a sense of what inspired a case study sometimes. Sometimes you can be so lucky. Those that go to Spur relatively often, you will know about, I think you know about the family card. And yeah, you can use that, right? You can pull the financials and see how they treat their customer loyalty program, if it's material enough for it to show up there. You can do that as part of your industry research, okay? But the point is not to go get Spur Group's financials and then like just copy paste and put that into your file. I liked what Kamohelo said earlier on. Going into the exam, a file was like, I think she said about this big. Right? For me, first case study I did, like 5 years ago, a file was like that. I could barely close it. That's how bad it was. And what I did, because we had chickens in our one. It was I started to learn about how chickens, broiler. I'll never forget the word broiler. And I reported Astral's annual integrated report. I printed the whole thing, 300 pages, and I chucked that into my file. They triggered one of the BE codes. I think it was code 4. I don't know which number the code it was. I printed the whole code and put it in my file. Waste of time. I mean, I didn't get through it, never read it, just made my thing just doesn't make any sense. But when I wrote the exam, it was like this, it was about this. For my learnings. Why? Because I realized, like Kamohelo shared this morning, that actually it makes more sense for it to be up here. And your brain can only absorb so much information. So if you went to the integrated report of Spur to do some of your research, that's fine. Supplement it in your research, but go there looking for something. So if you go there looking for an industry analysis, go there and be like, okay, what did the Spur CEO chairman say about the retail industry now? Pull out that information, right, and put it in your research. What does it say about customer loyalty? Don't put the whole thing in. Okay. If you didn't make the connection, it's not a deal breaker. Why? Remember what I said. The information you need is here, right? This is your primary source for your conclusions. Industry stuff, blah, 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 that's all supplementary. That's more HLA points. Very rarely, or industry, almost like an industry practice from an accounting perspective, be required as a primary indicator. Okay. So what do our customers do? Discounts such as discount vouchers, once customers have spent a certain amount of money at their restaurants, and access to exclusive promotions and automatic entry into competitions. Okay, so now what's different to the previous trigger? Now the examiner is giving you some specific direction in terms of what specifically you need to be including in your research. Okay, now we're not going to go into the detail of it all, right, because we don't have time. But now, so how could it also come through? This should come through as an attachment to contract. Okay, examiner literally gives you a contract and he says, I'm worried about the accounting treatment of this contract. Far too often, that's what I call detailed PRIs, right? Far too often do I, after we do the whole process of the case study, and you get there and you just wonder, like, you're just like people, like, you had this whole thing, like, what were you doing with this contract this entire time? Were you not engaging with the information? Were you not applying? Like, you know, you need to, like, you've got a lot of, I often say your PRI is rich with information. Therefore, you need to make sure I promise you the examiners are giving you that information for fun. Right? And to ensure that the case study is not, what's the word, wordy, right? So we go through the process, or there'll be a process to say like, oh, this case study is quite hectic, like 19, 20 pages. Let's try and make it a little bit more concise. So get rid of all the stuff that they deem to be irrelevant, right? So that the document is nice and concise. So the things that are remaining, what does that tell you about the things that are remaining? They're important, right? So don't glance over information, especially when your PRI is rich. So I think either way, it's quite tricky. If your PRI is one sentence, okay, there's almost the risk that you don't realize just how much work you can do, and the extent of your research is too shallow. So think about what we spoke about in the first session. When the information is rich, like this, I guess you get the same problem. Then you don't engage with the information to the extent that you need to engage, right? So those two bullets are important. Let's think about those two things. But at least at this point in the trigger, you had no idea in terms of what's coming at you, right? Although such a program has obviously come at a cost, it holds many potential benefits, such as have the proven effects, the more often customers visit, so cool, win-win situation. I'm not going to go through all of this. Lani would have unpacked that in the reflection video. The board is comfortable to consider the business of the merit of such program, but will draw on your technical expertise to advise on accounting and tax. Let's address a question that was asked earlier on. My group comes with 50 pages of research, and we do all 4 disciplines for every single trader. Talk to me. Do we need to do for all 4 disciplines? What is that trigger telling me? Accounting and tax, right? And then what else is it also doing, that trigger? It's also doing something else. It's treating accounting and tax, but what is it also doing? Sorry. Not really yet. The board is comfortable to consider the business merit of such program. Yeah. Yeah.
So it's scoping you into the accounting and the tax implications of the specific loyalty program that they have decided that they're going with.
Yeah, absolutely. And is that and is it and it's telling us that the board really wants expertise on these 2 areas. Do we need to worry about strategic implications here? Right? The board, something like the board already has that information. They don't need that from us. So from your research, to avoid that 50-pager where you just verbatim research all 4 disciplines, triggers there, people. Triggers there. Do you want to do a half-pager covering some strategic points? Yeah, by all means, do it. Yeah, I'm not going to say no. Do you want to have a half to 1 page with some audit procedures? I mean, fine, do it. But don't come through with like 20 pages of strategy and like 20 pages of audit. I mean, that's not the trigger. Okay, cool. So I just wanted to bring that through again. All right, now this word, accounting and tax implications. I want to cover that too very quickly because that's different from the previous one. Okay, previous one is, trigger is, I'm concerned about the journal entries. Okay, this one. What does accounting implication mean? Yeah, go for it. Can I have the mic in the front here? I like your gesture, and I think I know where you're going, and I want you to speak it. I want you to voice it in. Go, bring the mic. Okay, can I hear from the chat? Anyone in the room? What does accounting implications mean?
Accounting implications we mean like from the from
peeps. If we don't know the answer to that question, then we are a lot of pain. Yeah.
I'm gonna try, but if it's accounting, thinking from scope all the way to conclusion. So scope, recognition, measurement, all the little practical experience, whatever, all the way to conclusion and recognition. Yeah.
All the way to presentation and disclosure, you said as well, eh? All the way to there. And that is across every single standard. Okay, and no one has told you that. I'm not going to tell you, oh, only think about IFRS 15, but I'm sure everyone, when you saw customer loyalty program, like, yeah, IFRS 15, obviously that's where we see that, right? And you just put your, the English word is blinkers, that Kamokheda was looking for. You put blinkers on, right? And that's it. You shot yourself in the foot. You're failing even before the 5 days is up, right? Okay, so, and I see everyone in the chat, absolutely agreed, right? Across the stream, from scope all the way to presentation disclosure, across all standards. Onus is on you to scope this into a standard. Onus is on you to tell me why you're comfortable this is IFRS 15 and your group. That's your part of your responsibilities. Okay, now, again, from an, and that includes deferred tax, by the way. Okay, and was deferred tax part of your trigger here? Like if a trigger triggers accounting and tax, and you don't see deferred tax as a trigger, then you've shot yourself completely in, yeah, not even the foot anymore, that's in the head, right? An examiner triggering accounting and tax. Deferred tax is within the ambit of, that's not a curveball, that's a development. Okay, so now and the trigger is carrying amount, tax base, like that detail, like deferred tax is being triggered for, obviously for the customer loyalty program, right? Not for everything. Okay, all right. And then tax, tell me about the tax trigger. Sorry, yeah, the hand in the room.
I was gonna say that it's all the acts within the tax legislation from income tax all the way through. So from Genesis to Revelation in the tax legislation.
Absolutely. Genesis to Revelations in the income in taxes. Absolutely, every single tax has been scoped in here, right? So we just love to say, oh, income taxes. Well, VAT is there too. And I see a comment in the chat there say, but what about VAT? Yes. How does VAT and deferred tax play together? How does that work? Have you thought about that in relation to customer loyalty programs? If you haven't, you're not ready for this task. Okay, and you've got 5 days to think about it. Okay, are we together, people? So the trigger, and after I've said all of this, do you have time to go trigger happy on auditing? Do you have time to go trigger happy on strategy when you go with your research? You don't have time for that, right? So what should the focus be? The focus should be on blanket rules like, oh no, somebody said you must always cover 4 disciplines. APC doesn't work as blanket rules. But are you going to go in the office when your boss asks you something like, oh, okay, wait. As a CA, I need to cover all 4 disciplines, right? You're going to be like, no, this is what you've asked me to do, and this is what I'm going to focus my research on. Everything else is supplementary. You can do the other disciplines, happy, but don't spend a lot of time doing it. Okay, just high level understanding is good enough. Okay, so that's what I'm going to say on this trigger. Okay, the reflection video also has some more information that you can go ahead and look at. And yeah, this massive negative scope, negative trigger. Okay, whatever you call it in your program. Okay, we call them negative triggers. I think Cycle also calls it negative triggers. Don't worry about revenue recognition for the rest of it. Okay, franchise agreements has very specific IFRS requirements in IFRS 15. The examiner could have gone there, right, if they wanted to, because it's APC, and they could have required you to learn how to account for revenue as a franchisor. But what they're doing here is they're scoping it out. So you don't need to worry about franchisor revenue recognition in IFRS 15. Okay. Alrighty, let me have a look at the chat and then we can go into the IOD. Awela says, please rewind to VAT and deferred tax. All I said was, do you understand how VAT and deferred tax needs to play together? And then now here I'm going to use this as an example to just articulate the importance of understanding principles. Okay, because a lot of you are busy looking at it and you're like, oh, VAT and deferred tax, how? I've never learned that in APC. Like, how does that work together? Right? I can see a few places here too. Go back to the principles. Deferred taxes, carrying amount, tax base. Carrying amount is, if it's PPE, it's the purchase price less refundable taxes. Okay, so take that out. Okay, it's nothing complex. Just like, have you thought about it? The tax base. So I'll say deal with VAT first, then deal with income tax. So deal with the VAT, and then once you're done dealing with the VAT, then whatever's left is your tax base, depending on the rules, right? Carrying amount, what's deductible in the future, carrying amount, it's the same thing. Okay, it's just like now, it's now because I've put the 2 words together, it's like, oh, I haven't read this. No, go back to the principles. Go back to the principles. Okay. Cool. Everyone's agreeing. Cool. Let's go into the IOD. Okay, again, remember, I'm going to focus on what's different, right? Hi there. I thought I'd pick your brain while it's still early in the day, right? 2 accounting tasks back to back. Fun times. Whether you do it in order, whether you do it in whatever order, doesn't matter. Okay? What matters is sticking to time, like as Kamokhelo mentioned. Okay? This is about the accounting and tax implications of the proposed customer loyalty program mentioned previously. In a nutshell, we are proposing the following loyalty program. So now it's development, right? You asked me on the day to think about loyalty programs. Sorry, let me stop scrolling like that. Loyalty programs that you asked me to start thinking about other people's loyalty programs specifically. So what's the focus of your research? The ones that have been described here, right? Because you've directed me to that. But it doesn't take away from the fact that there are different types of loyalty programs. In your research, from a tax perspective, you would have encountered points-based loyalty program as an example, right? Has a whole interpretation note. And then discount-based loyalty programs, you go back to the VAT Act, you could have encountered that. What would you do in your research? Focus on the discount one, because that's what's been described as a type of loyalty program. But I'm just being given examples. So I'd be very foolish not to research how point-based loyalty programs work, okay? Interpretation note 108 or 118 or something like that. Okay, but my research focus here, because I've been given this information. Okay, if you, as a classic example, if you go into interpretation note 118 or whatever the case may be, it's long. It's a long document, right? And now you can get into this rabbit hole of being like, stressing out, guys. Let's do a 2-hour session where I teach everyone how to deal with point-based loyalty programs. Right, you're just wasting your time. Your examiner has directed you in the direction that you need to go, right? And what the examiner going to do? He's going to develop that. He knows where he's put you from a direction perspective. So I'm going to take you from there. Let's go to the next step. Okay. If the trigger said some are like family cards, which are discounts, others like clicks are point-based. If the PRI said that, then we're giving equal effort to both types of loyalty programs. Okay. Right. I thought I'd pick your brain while it's so early in the day. This is about the accounting and tax implications of the proposed customer loyalty program mentioned to you previously. In a nutshell, we're proposing the following loyalty program. Okay. Now, same as what's the same from the previous task. I've created my expectations. So this development on the day, I'm just like, okay, fine, yeah, examiner, ball is in your court. I know what information I want from you. Okay. Let's see if you're going to give it to me. Anything missing? Well, our completeness tests, I'm going to bring it up that I need the stuff. Okay. It's part of competence. Can you identify that something is needed? Restaurants will issue the loyalty cards to customers free of charge. Customers can obtain a card at the Fodjan's restaurant after completing a short form with their details. Okay, I think somebody mentioned the customer loyalty program on or not. It'll impact what I say about the customer list in the previous task. Yeah, happy. You can do that. Okay, it's all one set of information. Like, oh, okay, you're actually supplying the details here. So it's not walk in, walk out. So maybe there's a potential to recognize this intangible. But hang on, does this intangible exist at acquisition? Okay, likely it doesn't. Okay, bring that into your response. Okay, it's good. It's important. It's all part of your logical argument. When settling the bill, customers swipe their loyalty card and the amount spent is recorded in the particular restaurant in the POS system. Customers will receive 50 Rand discount voucher for every accumulated 1,000 Rands that they've spent at the restaurant, excluding VAT. This discount can be redeemed against the cost of future meals at the same restaurant. Discount vouchers expire 12 months from issue date, and customers will have no cash back option. Okay. So cool. So now we've been given the features of this particular loyalty program. Okay. Information that we need to use to create our expectation. So same as last time. I don't know what the task is. I don't know whether the task is draft a memo. I don't know whether the task is review a memo. All I know is I'm reading information and I need to now establish my expectation. And to take the information from the PRI that I've learned, okay, including the different discounts, right, and we can go into a little bit of that. And then I need to start applying some of that information here. So let's think about the accounting a little bit, unpack it, and then let's think about the tax a little bit, unpack it. Just very quickly, right, because we don't have much time. Okay, so what are we thinking from an accounting perspective is relevant in terms of this particular customer loyalty program? What standard are we in? Why are you comfortable we're in that standard? And what principles of concern to you are applicable? Let's hear it. Not a trick question. I know I may have sort of freaked you out in terms of scoping and stuff, but it's not a trick question. As long as you're comfortable with why, then I'm happy to. Which standard? Why? Accounting. What are the accounting implications, people? Okay, IFRS 15. Okay, question is why? Step 2. Question is why? Absolutely, thank you, Belinda. These are contracts with customers. This right comes from a contract with a customer. Agreed? Okay, why step 2? Can I have some more input in the room? Or online? Absolutely. So there's a promise here. So when you did IFRS 15, you were like, okay, fine, it's all about identifying promises. There's a promise. And this promise, and this is where terminology is very important, right? Because IFRS 15, for me, I think the magic happens in step 2, right? How complete and robust is your step 2? How can you ensure that your step 2 is robust? Okay, is by identifying all the promises. Okay, what have we promised to give the customer? Right? And then here we're being asked about a specific promise, right? We just need to think about the discount. Okay, so what does IFRS 15 say? Okay, fine, you've got a promise, but you only have a separate unit of account if you meet the criteria of a performance obligation, right? Distinct in the capable of being distinct and distinct within the context of the contract. Okay, that's a general rule. Right? But IFRS 15 is then like, oh, but hang on. There's some types of promises where I'm going to give you specific guidance. Same principles, but don't worry about the general guidance. I'm going to give you specific guidance. What are examples of those? Admin. IFRS 15 says don't even bother going into the details. That's not a performance obligation. A right of return asset. Don't even bother. That's not a performance obligation. Oh, you got a warranty. Okay, cool. Here's some criteria that you can use. Oh, you've got a right to purchase additional goods and services, or you've promised a right to acquire additional goods and services. Okay, I'm going to give you specific criteria that you need to use to assess whether or not that is a separate performance obligation. Okay, this should have all been part of your research. Right, and we speak about whether or not there is a material right. Okay. Maybe a new concept, maybe something you've seen before. It is in your syllabus in ITC, but it doesn't come up often, so understandable if you haven't seen this in a very long time. Okay. Oh, but then there's an illustrative example in IFRS 15, i.e. Okay. This all comes from all of your research. What is a material right? The standard gives you an example. This is the type of material right you can look at. Okay. Meanwhile, where am I? Right? I'm still in the standard. What is my research? My research is still the accounting standard. I haven't spoken about pulling PwC reports. I haven't spoken about Indonamo notes. I'm still in IFRS, right? And that should be the primary basis of your research. Okay. You can use other resources to supplement your understanding. So I spoke about a textbook. That's fine. Right? Indonamo notes, videos. That's fine. PwC or EY, Deloitte guidance documents. That's fine if you can find them. But ultimately, your research should start and end with the accounting standard. Okay. Because that's always going to be the complete source. That's your examiner source. You don't know whether your examiner pulled EY's report or PwC's report. Okay, you don't know that. but you know the examiner has to comply with IFRS. So IFRS, right? So if you work through IFRS, the illustrative example for material rights, that would have given you a hook, line, and sinker to conclude that this is a material right. Okay. Cool. But you didn't have enough information in the PRI period to conclude. Only now that you've got the more features of this. Okay. But then the standard then goes on and says, okay, fine, from a measurement perspective, I'm also going to give you some specific principles. Right? So another thing about IFRS 15, right? Always know the standard per what you shared with me now. When I asked you, what is accounting treatment? You said definitions, recognition, measurement, presentation, and disclosure. All right? Now, you're not going to find step 1, step 2, step 3, step 4 in the standard. Say in the intro, yeah, fine, happy days. But not in the standard. What is the standard? Definitions, recognition, measurement, presentation, disclosure. So know where each step sits. All right, step 1, 2, and 5. Step 3 and 4. Right? You need to understand that because that can be important for a trigger. Right? The trigger could say, I'm concerned about revenue recognition. Okay. My Dynamo peeps that wrote case study, the sub. Okay. Very specific trigger. Recognition and lease identification. Those are the two very specific things. Right? Now, if you go and research the whole of IFRS 16, it's wasting your time. Yes, supplement it, so 1 page if you want just to refresh. But focus on what the trigger is. The trigger says, I'm concerned about whether or not this thing meets the definition of a lease. That's a very specific trigger. It's a big trigger because it's a very complex assessment, but understanding that accounting treatment is everything, also understanding where the trigger whittles it down is also important, right? Because the trigger can do that. I'm concerned about the measurement of revenue. Okay, that's very specific, right?
Yeah.
Right, so that's accounting. Now the promise is a separate performance obligation distinct. Sipika agreed. Material right in Tembo agreed. Tumelo, IFRS 15, because it's a contract with the customer, determining if the customer load plan is agreed. Agreed there too, and step 2 agreed. Okay, let's do the tax very. Is there a question? No. Tax very quickly. Income Tax Act. I just want to cover the principles from expectation, then we'll move on. Income Tax Act, or VAT rather, before we get to Income Tax Act, look at me making that such foolish mistake. VAT, right? It's very different. It's very clear that this is a customer loyalty program that's discount based, right? Not additional points based. So the interpretation, note the scope down of what you need to be thinking about, right? So discount based. So for VAT, discount based customer loyalty program, and the principle is actually relatively straightforward, right? The consideration for the your consideration is less the discounts. Consideration is less discounts. So this is for output back purposes. Consideration or value of the supply. I think it's value of the supply. Sorry. I want to try to keep the terminology correct. Is less the discount, right? From an output back perspective, right? So it's quite simple. And then from an income tax perspective, the principle again it's a basic principle. Section 11A, right? Is this thing deductible, right? So use the general definition of and some case law. I've got some summaries in the slides there, and some case law to just guide whether or not this actually does an obligation exist here. Is it actually incurred? And consensus to that has been no. The discount is not actually incurred, so you cannot get a deduction. Okay, then another question pops up whether or not you can get an allowance for future expenses. Okay, answer to that is no, because allowance for future expenses needs that a single contract. Okay, there's an argument that the contracts are different. The one that gave you the discount and the ones where you claim it, those are 2 separate contracts. Therefore, if the KICS case is to go by, the answer that answer is no. So you cannot claim an allowance for future. Cannot claim, is it a deduction? I think it is an allowance for future expenses because it's not the same contract. That's one of the requirements. And then that also came through in the KICS case, which is quite recent, which could come into your research. Okay, so very mechanical. I think that tax is like very black and white, right? Very less substance. Maybe sometimes when you have these case law scenarios, it's a bit grey. But yeah, usually just like can you hit the sections Do you know what's the right section? I just apply according to that section. Okay, half an hour left. Let's push on to the last little bit of this session. Okay, the program will therefore be operated by an individual franchise and not at a holdco level. I'm going to skip that. We're still at the proposal stage, and it'll be useful to know the accounting and tax implications from the perspective of the franchisee restaurants. Right, still here, I'm not sure what the ask is. Right, I know we're trying to understand accounting and tax, and you keep telling me accounting tax, but what do you actually want me to do? What's the output? This will assist us in answering the questions for franchisee to engage in more about the proposed program. Excuse me. I prepared some notes in this regard. See attached. Kindly review these and comment on the following. Okay, now we're flipping to some business. Okay, again, another task where I've been given something, and then I need to review and comment. Right. So now already I'm asking myself a question, right? Because remember to our previous conversation, components of a task. Okay. Don't glance over words. One word here, review. What's the other word? Comment. What does comment mean? I don't know. Right? I don't know. I'm hoping I'll get more information. Like, do they just want like commentary? Like, hey, great job. Like I don't know. Like, what do you mean by comment, right? So and again, they're not putting, because I mean, people review this stuff like to death, right? If the word comment was not relevant to this task, somebody in the review process would have said, delete this word, it's just going to cause confusion. Okay, so they left this word in there. So it means it's important for something, review and comment. So if I'm visualizing my competent candidate, my response needs to have a review. I'm comfortable with what a review is, but I'm not really quite sure what this comment word is. So let me read further, see if there's a little bit more information. But competent candidate does both. If you don't do both, you're out. Bullet 1, any disagreements you may have from an accounting perspective. Okay, 1. I think, sorry, let me save this down here. So 1, disagreements from an accounting perspective. Okay, that's thing number 1. So now, am I going to get indicators for saying, oh, you did this correctly? No. Okay, people ask me, oh, a review, like, do you have to say what's done correctly, then incorrect? I'm just like, guys, there's no rule. What is the task asking you to do? That's where your answer is. What is the skill you should be practicing? How good am I at understanding what the task is asking me to do? Not how good are you at remembering what review means, what critically analyze means, right? How do you practice that? Pull cycles, past papers, read a bunch of IODs, do the exercise of saying, okay, fine, let me just unpack what this task is. Then have a look at the solution, see if the HC one, and see if it's aligned to what you would have done, right? That's how you practice what you do. Okay. There's so many sort of documents online. As well as, okay, and any important considerations I may have missed. Again, this whole completeness thing. Again, same as the previous task. Okay, the examiner is highlighting this because if I don't do this, what I've missed, I'm not going to come out here with a C. Okay, okay. Please include explanations to support your response. Now, that's what you said. Okay, and again, right? Examiners are putting this for fun. What are they suggesting by please include explanations in your response? Why is he telling us this? In the chat online, why is the examiner telling us to please also include explanation, or rather, let's say not examiner. Okay, let's say a little bit both. Why in this hypothetical scenario does Elijah want explanations, and also why is the examiner saying that again? And they're comfortable, all the reviewers are comfortable that sentence is in there. Why? Why, people? What are your thoughts? Start a trick question. Why? Yeah, go for it in the back. Your mic is coming.
Would I be wrong if I say it's because maybe ultimately whatever we're going to be commenting on and reviewing is going to the board?
Is what, sorry? What are going to be?
The board.
Is
going to the board of directors?
No, not necessarily. Not necessarily. I don't see a board of director link here at this point. I mean, it is going to go there, right? Eventually, but then the knowledge will go there. I don't know whether or not the document is going to go there. Yeah. I'm specifically asking for explanations to support your response. And we just spoke about how you should always have explanations. Sorry? Depth. We have background that Elijah has little knowledge on, but explaining it to add value, or that comment has been deleted. First is emphasis on depth to ensure you give enough answers to correct what I'm wrong. You want us to, exactly, everyone in the chat here, I don't know whether you all have access to the chat, they want us to answer the why of the question. Emphasis on depth, so that you have a clear understanding of the issue. So what they're saying here is like, I want explanations, I want depth with your comments. So whatever I've done wrong, okay, I want you to go into a lot of detail as to why it is wrong and what the correct outcome or what it should actually look like, right? So this review could very easily be a review of yes, you're reviewing because you have to pick up an issue, but your analysis is now a detailed explanation. Somebody asked earlier on, how do I know how much is enough? It's wasting time. I'm going to tell you. Now, what does it mean your response needs to look like? A detailed explanation, okay? Cover the principles in detail, okay? Because it wants explanations of the stuff that's incorrect, okay? And the stuff that's missing. I want details. Cool. In addition, with your accounting explanation, so in addition, like how complex is this task? Like, miss any one of these things, you're dead, right? So spending an hour planning, that's not a bad idea, okay? Because if you miss any of this, you've failed before you've started. So then what's the point? Might as well just go home, right? So this makes sure you don't lose the race before you even start. So plan appropriately. And a task like this is extremely complex to cover every single element. Okay. In addition, and how many ands are in here? Provide illustrative journals. Okay, now let's talk about journals. Wow, we love talking in journals. Blah, 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 blah. If I ask you to discuss something, like that acquisition journal entry, your responses would be like, and therefore we need to debit investment and credit, whatever. Okay. Your memo is going to the board. Okay, maybe that's okay-ish for Rolf. Your memo is going to the board and you're like, it's incorrect to debit this and credit that. Instead, we need to credit that and debit this. There's not going to be any wording for that. Right? Unless sometimes they're a bit lenient and say, okay, fine, if you put narrations, we'll be a bit lenient. Learn to speak in English or accounting English. Okay, what is a journaling? What are you doing with a journal entry? You are recognizing. Okay, the scope tells you which standard you're in. Initial recognition tells you when to pass the first journal entry. Measurement tells you how much to pass in your journal entry. Okay, so instead of saying debit assets, recognize an asset. Instead of saying credit asset, de-recognize an asset. Okay, that's words. But that's now to Rolf, right? To the board, you might want to say, bring onto my statement of financial position, right? Because it's almost like I'm bringing it on, because the board won't understand recognize. Like, what is recognize? Oh, you're an engineer on the board, right? What does recognize mean? So you might want to make it a little bit more simple to understand. Take it off, right? Bring in an income, introduce an income into income statement or an expense, right? So try and use understandable language. Okay, so but here we specifically been asked for a journal entry, right? So let's give journal entries. Okay, and we've been given some numbers, so let's use all of those numbers. Lovely, we love numbers, we all love numbers. Okay, at least some familiarity, hopefully. And of course, now bringing in measurement, right? So in your research, right, because we spoke about it up here, you should have thought about the measurement principles in your research. You didn't have the numbers, but you should. But if you read the illustrative example, there were numbers in there that you could have worked through at the example. Bring that with you on the day. Chop and change. Which comment is active now? Chop and change the numbers of the same measurement here. Okay, and then you've got your answer to this. Right? Oh, the thingy died. Let's see. I knew it was dying. So yeah, so chop and change the numbers. You've got an illustrative example, chop and change, boom, you can answer these journals, simple. What else do I want to mention? The newer standards, because I know we love to go, start with the standard first. The newer standards are quite nice with examples. So if it's 9 is triggered, if it's 10, the newer ones, 15, 16. If there's a principle that gets triggered, like use your illustrative examples. They're usually quite nice and detailed, right? For example, if a lease modification is triggered, right? If a reclassification of financial assets is triggered, there's awesome examples in the illustrative examples that you can rely on. Okay, that your examiners are probably also relying on. Right, so I'm going to skip all of that. I'm not going to read all of this, right? It's all that goes into the calculation. Okay, you can almost work through that. Okay, and then the same for tax, right? So I'm going to put a little comment here. Disagreements from tax perspective and considerations missed, so that's 2, and explanations. So I want some details. I want details. Okay. To me, it seems like the accounting and tax implications are really straightforward. Can this really be? Okay. Maybe the examiners are being a little bit playful here, or they're trying to highlight the fact that, like, from your research, I'm pretty sure you'll be like, no, this is not simple. First of all, this is APC, so I know it's not simple because it's APC. But second of all, for my research, it's not simple. So maybe also just giving you a sense of like, okay, fine, this guy's missed the plot, right? Potentially. So then all that detail now makes sense. Okay, so let's look at what he wrote. Very little, half a page. Right? So now this is what I was mentioning earlier on. What's the time? This is what I was mentioning earlier on when we spoke about what shall I call it? A seemingly review question actually being a lot more of a discussion question. Okay, this is kind of what I meant, and again, a reason why you need to not be rigid, and then you need to not be rigid in your response. It's like, oh, this is a review. This is the approach I'm always going to take. You always need to understand principles, right? Audience, words. Examiners don't leave words in for fun. Instructors are not left in there for fun. Cover all components, all those principles to be able to appropriately answer a question like this. And I'll illustrate by going through this thing. So the first, for the accounting, we've got timing of recognition, and then we have amount. And then we've got financial statement impact, right? So now remember your research, accounting implications from definitions to presentation disclosure. Therefore, this should have not surprised you. Okay, you may have read it and then maybe you saw like, oh, it's actually just a journal, so it's fine. I'm actually much calmer now. But if there was a disclosure here, it says review that disclosure extract. That's fair game. Right? That could have come up. A deferred tax calculation on customer loyalty program. That's fair game. Could have come up. Right? So to use that to reflect in terms of your research. Like, did you just get lucky? Or was your research robust enough to prepare you and you didn't have all of that auditing and all the other disciplines in there? Strategies. Okay. Timing of recognition. Okay, so this is step 5. Awesome. The cost of the loyalty program is recognized as and when customers use their discount vouchers, and discounts are driven by franchisees. Are given by franchisees. So the cost of the loyalty program is recognized as and when the customers use their discount vouchers, and discounts are given by franchisees. So it's almost like a two-part test at the same. Two things need to happen. They need to be given and the customer needs to use it. That's when I recognize the cost of this loyalty program. What were you guys thinking at this stage? Sorry, this thing is died. Great. And it's not charging. I plugged it in, but it's not charging. I'll check my comments in the chat here so long. What were you thinking at that point? All right. Let me see my comments in the chat here. Sorry, people, my device died. Let me just work through the comments here. Yeah, I spoke about that. Spoke about that. Okay. We were in trouble, most. Yeah. Word document will be uploaded. No problem at all. Every single document that I've just reach out to the team and then we will upload it if we forget. But yeah, I'll ask the team to upload every single document we've worked through today. Can I get an answer to my question, please? What are we thinking? Is the statement correct? Are we tired? Do not know. I mean, you can also say you're tired. That's also a respectable answer. It has been a long day. I think a bigger problem would be not knowing whether this is right or wrong. It has been a very long day. I completely understand. Don't you worry. We just have 20 more minutes. If you want to stretch your legs, it's kind of hot in here. So if you want to go walk around, stretch your legs, go for it. But just 20 more minutes, I'm going to ask from you, and then we're done. In the chat, maybe online, thoughts? All right, Blessing says, Tim is saying, where's Shumi tired? Yeah, I understand. I completely understand. You're all tired. 20 more minutes and then we're done. Okay. Like I said, if you want to take a walk, go for it. Referring to cost, not revenue. Absolutely. So it's a fundamental problem here that this person has made. Elijah. Seems like there's a big misunderstanding here, which now explains what the examiner asked me to do. Because of this, with the journal entries, at least we were like in the right track, right? So we could say, okay, line by line review. Let us review line by line, right? And then that could get you your coverage. Here you've got somebody that's like completely lost the plot, but they've asked for detailed explanations. So what do you need to do now? Is it sufficient to say that, oh, customer loyalty programs are revenue items, not cost items, and then move on? And you've completely dealt with this issue here in the context of the task that you've been given. Is that sufficient? This is somebody that's fundamentally lost the plot. So what do we need to do? What do we need to do? Not a trick question, people. Like, sure, I know there's fatigue going on in here. Almost there. What do we need to do what do we need to do? Yeah, go for it. I've got a hand in the room. What do we need to do for somebody that's completely lost the plot? Sorry? Yes, stop identifying the issue.
Identify the issue.
It's revenue, not cost. Okay, but like that's not enough, right? Yeah, go for it. There's another hand in the back.
Maybe we identify the issue. We identify the issue, but timing of recognition, because of the question, yeah, there's timing in terms of from accounting point of view, and there's timing also from a tax point of view. So I don't know if, yeah, his timing is broad.
Yeah.
But I know I had to say the accounting implications and the taxation implications, and maybe bring him back to say the reality in terms of splitting it up, in terms of timing of recognition is split between these two elements.
Yeah, absolutely. I think I caught that. Okay, this person, Elijah is talking about timing of revenue, sorry, cost recognition. Right, we need to be talking about revenue recognition. Moreover, like we're already talking about timing here, an amount, but we've skipped so much. I asked the question, what's timing of revenue? Someone say step 5. Oh, is that how you recognize revenue, people? Right? So what is the onus on you now? To have a discussion about how revenue recognition works. Right? It's a review, yes, and that point is triggering your discussion, but you see how it's a review, but it's actually a discussion. And the reason why I'm going into so much detail is because you told me that you want detailed explanations in the first place. Are we together? So, yeah.
You also have to persuade him. You also have to persuade him in your discussion, and hence it can't be like a one-liner. It has to be detail behind it, because I have to persuade him why he was thinking this way to why he should be thinking a different way.
Absolutely. Imagine if you told somebody like, hey, if I drop this water bottle now, it's going to float. Like how convincing? Because now that's my reality, right? This guy believes a customer loyalty program is a cost. Right? Now you're gonna come to him like, oh, bro, actually it's Elijah, yeah, guy. It's actually revenue. I'm like, whoa, what are you talking about? Are you crazy? Like, you know, I'm incurring this cost to generate revenue, but it's not a revenue concept, right? You're almost like distorting his reality. So you need to be convincing, right? In a way to explain to him that that actually this is a revenue concept, right? So that explanation becomes quite important, okay? So almost shifting from cost to revenue, and then let's say, fine, this is how revenue recognition works. The first thing we need to do, okay, before we even get to this discussion, is to say, how many, do we have performance obligation? What's our unit of account? Okay. Are we just selling this meal, or are we kind of selling a meal and the future discount? So in exchange for 1,000 rands, we are giving the customer a meal, and we're giving them the right to a future discount. Okay. So from an accounting perspective, if we provide them with a material right, and you can explain material right principally, we now have 2 units of account. So we need to recognize our meal when we deliver that service, probably at a point in time. And we need to recognize our revenue on the customer loyalty, on the discount we sold when the discount is used or it expires. Okay. A material right, apply, where it's a scenario where no customers will not get a discount unless they enter into this contract. Therefore, that gives rise to a material right. There's no information here to suggest that we're giving other customers this discount. Therefore, this would be a material right. Therefore, we would have 2 performance obligations that we have to account for. To illustrate the point using the numbers you've given me, right? Are we comfortable? Okay, and before we even illustrate the point, maybe I've jumped the gun, right? So that's step 2, recognition. Then you could talk about measurement, right? So the consideration that we've received, as an example, using the numbers you've given me, is 1,000 rands. However, we need to allocate this 1,000 rands to 2 performance obligations. Okay, we could use the value of the customer right less the breakage, they call it, right, or probability of it being used, and then we'll use the 1,000 rand for the food, do the ratio, allocate it. Then that's our revenue for each. So using these numbers, here's my illustrative journal of what it should look like. Okay. And the reason I've gone into this whole effort of describing this thing is because of 2 things. One, clearly someone here has lost the plot. Elijah's lost the plot. And 2, Elijah has asked for explanations more than once, right? So he wants some coaching here. All right, and he needs to be convinced, as was made in the past. Okay, so I'm just going to put a comment here. Elijah has completely not lost the plot. Don't say that in your response. Elijah has, and I wanted to say no clue. Elijah is mistaken, completely mistaken. I'm trying to soften this as much as possible. Therefore, and has asked for explanations. Therefore, onus is on us to explain in detail to Elijah how revenue recognition works, right? And apply to the information given, as we've discussed. Okay, that's just a quick summary there. Okay, then amount, it goes on to say that amount is, amount to be recognized for accounting purposes is simply the actual amount of discounts granted, i.e. the aggregate of 50 to be received by the customer. So again, right, we can critique that because we can say like, actually, it's almost like a revenue point. So again, as I've explained, it's actually a revenue item. We need to actually allocate the transaction price to this, and it's not actually like an expense item that we need to sort of expense as you've explained. Go for it. I've got a question at the back.
I'm not sure if I missed this in the pre-release and the IOD.
Yeah.
But they were asking for like accounting and tax implications for the customer loyalty program.
Yeah.
So would it not be inclusive of both from a cost perspective and from a revenue perspective?
Oh, so I guess from the only cost would be just like the expensing of the food.
And then because they're offering the customers the cards for free, but for them, they would also have to incur some kind of an expense for that. Like, I'm not sure if the cost of them having to actually implement this whole customer loyalty program, because they have to bear, as the restaurants, they will have to bear the cost of like providing the customer loyalty program.
Yeah.
So the issuance of the cards or whatever, I'm not sure if then from like an accounting and tax implications, if we needed to cover just the revenue or the costs as well.
Yeah, great question. So I'm sure you've all heard that online. You heard it online, eh? Hello? Was it audible online?
Yeah.
Okay, cool. So great question. And then that's where this hybrid of this review and discussion comes in, right? Because if this was just a discussion question, accounting implications of a loyalty program, 100% agree. Now we can almost discuss everything that we can see to the extent that we have the information in terms of the accounting treatment. But here, this is, remember, still a review. So what we are sort of, and I guess complete is also important, so we'll come there. So we must be triggered by what we're seeing here, right? Firstly, okay? And then from a completeness perspective, now you can talk about the costs one in two ways. So the cost of operationalizing the customer loyalty program, okay, fine. So if it's the cost of the cards, if it's the cost of, I don't know, hiring new people, if it's a, so that's fine. You can talk about that as a cost, but the actual loyalty program cost comes through as a reduction in revenue. So instead of recognizing 1,000 Rand in revenue when I saw the food, I'm only going to recognize 960 Rands, and I'm going to raise a liability for the difference. So that's where that's the cost of providing the loyalty program. It comes through as a reduction in revenue, and then when you satisfy that what you promised, then you can almost like recognize your revenue. So there's not a separate line item for cost of loyalty program. Cool. Righty. So so the cost of the discounts granted is expense to pay now since it reduces the cash amount. So yeah, you can critique this journal entry, right? That will come through from the 5 tips as well. I'm not going to go through that in detail. Let me just check the chat if I've got some questions. Sorry for just scrolling around. Let's have a look here. Yeah, so people agreed. Explain scope, explain principle, explain everything, right? Because clearly we need to explain. No need to provide comprehensive explanation and addressing the issue. No, I disagree. You need to provide a detailed explanation to explain the issue. Taken through, I've noticed that timing was being placed to cost of cost of revenue. Identify PO and then conclude on the allocation. Agree is something incorrect. Agreed. We need to discuss if the promise meets the definition of performance of agreed. Agreed. Okay, come again on the cost. I will do that. Yeah. So it's what, and it's something that Elijah's thinking here, right? You could be thinking that no, because I promised to give a discount in the future, that's going to cost me something, right? That's the sort of train of thought. I'm selling food, and because you've bought food now, I need to give you a discount in the future, right? But that's going to cost me something. Under the new IFRS 15, that cost, if you want to call it that, comes through as an obligation to deliver on a promise, right? When you promise the customer to give them a future discount, you actually have assumed an obligation to the customer that in future I'm going to give you the value of 50 Rands should you spend X, Y, Z. And that obligation you've assumed, the cost everyone is referring to, comes through as a liability on your balance sheet, but the contract, the debit, doesn't go through P&L. It goes as a reduction in revenue. So if you wanna gross up the journal, okay, if you wanna net the journal, debit cash 1,000 Rands, credit revenue, let's say 950, credit revenue contract liability 50, right? Or you can say debit bank 1,000, credit revenue 1,000. Then you could say credit contract liability 50, debit revenue 50. So that debit, because you're looking for the debit and you want it to come through as an expense. It doesn't come through as an expense, it comes through as a reduction in revenue. So you are recognizing the expense as a liability, but the contra is a reduction of revenue, not a separate expense. Okay, so that's just that explaining that again. Okay. Okay, cool. I don't think we have enough time, but I guess for that, same principle, right? So as this is the cash incurred to generate income, restaurants can claim input VAT from SARS at 15%. Again, lost the plot completely lost, right? Because when we read section 1020, I think it is, of the VAT Act, right? It's clear this is an output VAT issue. This is not an input VAT issue. There's nothing we're incurring here for supplies in the furtherance of an enterprise. Okay, and I paraphrase that probably horribly. Okay, we're not incurring anything here. Right, it's an output VAT. It's a value of the supply question. So again, Elijah's completely lost the plot because he's seeing this as an expense. So the same as before, we need to explain, right? We change his reality because we need to be convincing, as was mentioned, to say, oh yeah, it's an input VAT discussion, not an output. Sorry, output, not input. An input comes through with the food. We can still claim all of that input VAT as per normal, right? And then again, lost the plot with income taxes. We again need to explain. So very quickly, what the marking grid looks like. Okay, I mean, I can't remember, so let's see if it reflects what they've asked us to do. Because I've just summarized all the tax stuff in there as well. Okay, and I just want to give some few examples. Okay, so so you see here how this now comes through in the indicators, right? So let's look at the first one. Argues whether vouchers are separate performance obligations. Okay, how are you going to have an argument? By having a detailed discussion. All thing he had, they went all the way to timing of revenue recognition as an example. Okay, you could have been like, oh no. Timing doesn't work like that. Timing works at the earlier of expiry and the customer using the voucher. You'd have been right, and there's probably an indicator for that. Right? And then you move on. You're like, okay, fine, I've got coverage. I've reviewed this. I've reviewed this point. I'm going to move on. Okay, you're right. But are you going to? I'm sorry, you're going to get the indicator. But are you going to have coverage? No, you haven't explained. You haven't done a completeness check. There's a lot of things missing here. Examiner mentioned completeness because they're trying to highlight what you're going to get is very incomplete. A review is always going to have missing things. If the examiner tells you, hey, don't forget completeness, the examiner is telling you that there's a lot of things missing here. Okay, be cognizant. If the examiner tells me, please explain for me, he's telling you, I want detail. Okay, so here this thing is talking about, where is it? Sorry for just going back and forth. Here this thing is talking about, how can I make this thing smaller? Argue that separate POs. Then concludes that the performance obligation is satisfied when the customer uses or expires, right? You'll get your indicator, right? A correct conclusion is needed, right? You have one, you've missed a one. Identifies revenue from the sale of the meats allocated to the actual food on a relative standalone selling price basis. Again, you'd have missed that one if you didn't have your detail. But you've done the research. It's saying your research is beautiful, but you misunderstood the required, not getting anywhere. Identifies that the standalone identifies that the standalone selling price of the discount needs to be reduced for the breakage. Okay, no one is prompting you to discuss that. Right? There's nothing in the thing is prompting. You had to realize that was an issue and discuss it because we asked for explanations. Identify that the cost of the discount should be reducing. See, so we did this, right? Identify that the cost of discounts should reduce revenue and not be expensed. Right? We did that. Right? So we would have had these two ones, right? But out of 5, we're coming out with 2 out of 5 here. Why? Not because we don't understand the principles, but we didn't understand the required, the task. Okay. Performs a principally accurate calculation to allocate the performance obligations on a standalone selling price basis. Hopefully you would have done this when you're doing your illustrative journals, hoping. Okay, you can get this. And I like what they said here, principally accurate. So again, I don't really care about the number. If you forgot to take into consideration the breakage, that's fine. You're not going to get double, right? Everything is independent principles. Are you demonstrating everything independently? I don't like using the word penalize because we're not going to get penalized in APC. Okay, for negative marking. Presents a journal. Okay, we needed to do that. Okay, and look at what's interesting here. They've heightened the bar, right? Not just the journal entry, but they also want to specifically see the deferred revenue, right? So that's a bit of a complex indicator. Okay, and again, you can't foresee any of this. This could have very easily been just present a journal entry. You get the indicator, right? Or they could have decided like, no. They don't want the liability, rather they want you to show the income after you've recognized it. You can't tell any of this. But the point is, going back to our definition discussion, IPAC, do the best, and then irrespective of how the indicator looks like, you're going to get it. Okay. Then present the one where it's reversed. Then present that. Now look at this. Look at how many indicators are dedicated to the journal entry. Why? Because it's a specific component of the task. Are we together? So because the examiner say, hey, I actually want journals as part of the task. And then what are you probably can you expect to see as the strawman? The profile of a competent candidate. They're gonna say, I want coverage in journal entries. What coverage looks like, I don't know what coverage, they can define it. But the point is they're gonna want specifically to deal with it. So if you only have one journal and not the next one, no coverage journal, no C. Simple. Why? Not because you don't know, you didn't understand the task. Right. Then the VAT comes down here. There's some VAT, they're likely just going to lump it all together. They generally don't separate it, but you don't know, right? They could say, I want coverage in VAT and I want coverage in income tax, or I want coverage in tax. You don't know how you're going to pitch it, right? But what are you going to do in your preparation? You're going to be like, fine, you specifically ask me for tax. Tax comprises of two components. I'm going to discuss both components. Okay, and you can see that from the actual attachment. They separated VAT and income tax. For me, to suggest that from a competent outcome perspective, they want you to discuss both, coverage in both. Okay, so HLAs, I'm not going to cover these, right? They're nice to have, so you can read those in your own time. There's expert again, in terms of tax treatment. So the point that I want to leave you all with, right, is that every single point is obviously important, from what you do in the pre-release to what you do. But on a day, when it becomes game day, if you don't purposely plan, as Kamokhela said, and you understand exactly what a competent candidate looks like, right? And you don't try to mentally prepare this in your mind to say, okay, you've asked me for journals, you've asked me for completeness, you've asked me for explanations, you've asked me for a review of what I've done wrong. And if you don't in your plan ensure that you've covered each one of those items with sufficient coverage, no matter how well you know the principles, you're going to walk out of that exam with nothing close to a C. Okay, so just remember that. All right, so it's very important to have that process. And you can never tell how they're going to document these things, right? It's very subjective, this. Okay, I mean, they have a process in terms of how they go about doing it, but it'll always have a structure, and the structure, and it'll always be informed, and it's going to be informed by what they've asked you to do on the day. Okay, that's how I'm going to leave our discussions today. I don't know whether or not there are any questions in the chat or in the room, and then we can just like call it. I think for official intents and purposes, the session is adjourned. So for anyone that wants to leave, you're more than welcome to leave. The session will still be recorded. So I'm going to take questions now. It's probably going to take us another few more minutes. And then for those that actually leave, then you can just watch the recording if you want to listen to the questions, right? So no one is changing to your desk. We're done. All right. Thanks, everyone. Thanks for all of the sort of engagement online, in the room. Yeah, looking all the best for your exam as well. That's coming soon. You've got this. And I think, yeah, you've got this. So just listen to Kamokhela's advice. There were a lot of very important nuggets in there. Be accountable and positive thinking, irrespective of how many times you've attempted this exam. Doesn't matter. All that matters is your next attempt. Okay. Cheers, everyone. Have a good day. But I'm going to stick around. Okay. So I'm just going to read some of the comments in the chat.